Welcome to the deep dive. Today, we're really getting into something foundational. Not just a company in the AI boom, but the company that's basically building the stage the whole thing runs on.
Exactly. We're talking Nvidia.
Yes, Nvidia. And their latest moves, huge investments, some partnerships you wouldn't expect. They're really shaking up the very infrastructure of AI.
And our job today, really, is to cut through some of the noise, you know? Forget just the stock price for a minute. What are these massive commitments, the sheer scale of the money, how the market reacted? What does it all mean for Nvidia staying on top?
Right. And for their future revenues, but also the risks. Because there are definitely risks, financial, geopolitical, that seem baked into the conversation now.
Absolutely. We need to unpack all of that.
Okay, so let's start with that scale, because the number we're about to mention, it just makes you stop. It's the kind of capital investment you rarely see, even in tech infrastructure. It feels like a massive bet.
It really signals something new. It's moving beyond just making and selling the parts. They're positioning themselves as the chief architect, the utility provider almost for these enormous AI systems of the future.
So the big headline, the one that raised eyebrows everywhere.
Yeah.
Nvidia is planning to invest up to $100 billion into OpenAI.
$100 billion.
It's way more than just, hey, buy our chips. This sounds like they're building something together, something huge. The biggest dedicated AI infrastructure out there.
And the details are, frankly, pretty wild. The plan includes deploying, get this, at least 10 gigawatts of compute power.
Oh, okay. 10 gigawatts.
All running on NVIDIA hardware, of course.
10 gigawatts. Help us wrap our heads around that. Is that like raw energy use?
Right.
Or is it some measure of processing capacity? Either way, it sounds fast.
It's generally tied to the energy capacity needed to run that level of compute, but the context is what's key. Think about it, that kind of power draw. It's like a medium-sized city. So analysts are saying, look, this isn't just big, it sets a standard. It basically dictates that if you want to train the really ambitious AI models down the line, you need hardware that can handle this scale.
Yeah.
And right now, nobody else is building anything close.
And the deal itself, the mechanics, they seem designed to lock things in further, right?
Yeah.
OpenAI buys NVIDIA's chips, so immediate sales for NVIDIA.
Tick.
And NVIDIA gets a non-controlling equity stake in OpenAI in return. Okay, but here's where I get a little curious. Taking a stake, even non-controlling, doesn't that maybe worry other big AI players, the Googles, the Metas? Seeing NVIDIA kind of cozying up with a major rival, is that a calculated risk?
That's a really sharp point and definitely creates a bit of tension. But the thinking seems to be that the upside getting that deep integration with OpenAI, who's clearly leading the pack right now, that benefit probably outweighs the risk of maybe annoying some other potential customers. Plus, this deal gives NVIDIA this incredible window into what the most demanding AI user actually needs. They see the problems first: latency, power, scaling issues. Their competitors don't get that preview. That's a huge R&D edge. It's invaluable, really.
And this isn't just some idea they announced. There's a timeline. First phase kicks off in, late 2026. And it even has a code name, Vera Rubin.
Yeah, that timeline, late 2026, and the code name, it all points to this being a long-term, multi-year thing. It's strategic. So connecting the dots, like you said, it's much more than just a massive chip order.
Right.
Analysts are right on this one. They see NVIDIA basically taking command of the whole compute stack. By funding and building the infrastructure for the leader, they're not just locking in future sales. They're setting the technical foundation for potentially the next decade.
Setting the foundation. Okay, that leads perfectly into the next move, which honestly might be even more surprising. If OpenAI was about locking in the top customer, this next deal seems aimed at making their tech unavoidable. The Intel partnership, who saw that coming?
It's a brilliant bit of strategic thinking, really. Shows flexibility. Even when you're dominant, you recognize that you can't let the ecosystem get too fragmented if you want to own the infrastructure layer.
So in specifics, NVIDIA is putting $5 billion into Intel. And they're co-developing stuff, integrated GPU plus CPU plus AI components. This feels like, strange bedfellows, given their history in the data center.
Historically, yes, an odd couple. But think about it from a systems point of view. This Intel move, it could fundamentally change the game. If NVIDIA can actually pull off blending the CPU Intel's turf with the GPU, their turf, and the AI accelerators, all into one seamless system.
Then they're not just selling parts anymore.
Exactly. They become the system architect. Indispensable.
Okay, but wait. Relying on Intel. Let's be honest. Intel's had some manufacturing stumbles, some delays recently. Does that actually introduce more risk into their supply chain? Not less. You're swapping independence for integration, potentially.
That is the tightrope walk, absolutely. It definitely adds risk, no question. But it looks like a calculated gamble. The goal seems to be creating a much deeper, much wider competitive moat.
How so?
Well, it's not just about selling hardware anymore. It's about setting a unified system standard. Imagine if all the big AI players start building their next-gen systems on this joint NVIDIA-Intel blueprint. It makes it incredibly hard for competitors, AMD, other niche players, to just slot their own components into those big data center deals.
Oh, I see. It boxes them out by offering a whole optimized package.
Precisely. A holistic solution that potentially only NVIDIA and Intel can provide together. And there's another angle analysts point out. This partnership probably earns them significant goodwill regarding the U.S. supply chain, helps ensure more stable domestic operations.
And the market definitely seemed to get this dual strategy, locking in OpenAI on one side, controlling the system with Intel on the other. NVDA stock jumped, what, around 4% right after the news?
Yeah, it popped. And it pulled the whole tech sector up with it, boosted other AI and chip stocks too.
So the market liked it.
It seems the market sees the stability and integration from the Intel deal as almost as valuable as the massive growth promised by the OpenAI project. It's like a vote of confidence saying, okay, we think NVIDIA can manage this complex ecosystem and drive huge growth simultaneously.
Okay, but we promised balance. We have to pivot now. Because for a company that's seen such, well, almost unbelievable growth, we have to talk about the other side, the risks, the analysts who aren't quite so bullish, that valuation tightrope they're walking.
Absolutely essential. The financial picture isn't all rosy. That valuation risk is very real. I mean, the stock has run up so incredibly fast. The current price basically assumes years and years of perfect execution.
Perfection is a high bar.
It is, and we're seeing some bearish takes emerge. Sources like Seeking Alpha, for instance, have actually downgraded their outlooks, their point. This recent massive run-up might mean there's less short-term upside left. The valuation just looks stretched to them.
What's driving that skepticism, beyond just it's gone up a lot? What specifically are the bears worried could go wrong?
It mostly boils down to two things, really. First, margin pressure. Can they keep making money at these incredible rates? And second, competition. Could rivals like AMD catch up faster than expected?
Right.
So the argument is that high valuation relies on Nvidia maintaining these amazing industry-leading profit margins. If competitors start grabbing market share, maybe in specific AI niches, or if the sheer cost of building out that $100 billion OpenAI infrastructure starts eating into their returns, those margins could shrink.
And if margins shrink?
Then the current stock price looks much harder to justify. That's the core threat the bears see.
But then you've got the other camp, the bulls. We see reports, like via Yahoo Finance, sticking to a pretty high target, right? Like a $190 fair value estimate.
Exactly. They're betting on that long-term execution. They believe NVIDIA will deliver on these huge strategic plays, the OpenAI build, the Intel integration. They think the market is actually pricing that future potential correctly, even now.
So the split seems to be execution versus,
Right.
well, external problems.
That's a good way to put it. Internal execution versus external headwinds. And you can't talk about global tech dominance today without hitting the biggest external risk for NVIDIA right now, regulators, particularly in China.
Ah, the thorn, as some call it. Sources mention China's antitrust authorities still looking into Nvidia, right? Stemming from past deals like Mellanox, and they've apparently extended probes.
Yes, and this isn't just some legal paperwork issue. It's a potential roadblock to their global growth plans. It raises real questions about how freely they can operate, or more importantly, sell their most advanced chips in the huge Chinese market.
So that China regulatory risk,
Yeah.
it's a constant worry.
It's a constant, unpredictable factor. It's called a thorn because it's always there, potentially limiting how big they can get globally. That bullish $190 target. It kind of assumes they navigate China successfully. If that market gets restricted, the whole bull case takes a major hit.
Okay, so huge growth drivers, but also real financial concerns and these tricky geopolitical hurdles. To maybe put some numbers on this huge range of possibilities for you, the listener, analysts have painted some pretty extreme long-term scenarios for NVIDIA's stock price by 2030.
Yeah, this really helps put it in perspective. Sources like 2047 Wallsaint mapped out a few paths, and it all depends on whether NVIDIA keeps its lead and protects those crucial profit margins.
So what are we looking at? What's the range?
Okay, so the bull case, best case scenario for 2030, they're talking around $491 a share. That assumes Vera Rubin is smash hit, the Intel partnership works flawlessly, and they get through the regulatory stuff mostly okay.
$491. Okay. What's the middle ground?
The base case is more like $241. That assumes they do well, but face challenges. Some competition bites, margins erode a bit, but they still execute pretty well overall.
Now the downside. The bear case.
The bear case.
Well,
That's if they lose significant ground to competitors and the regulatory issues, especially China, really clamp down. Then the projection drops way, way down to $38 a share.
wow. $491 down to $38. That range says it all, doesn't it? It shows why the current valuation feels like such a tightrope. You're essentially betting on whether that $100 billion gamble pays off and how these global pressures play out.
Precisely. Huge potential upside, but also significant downside risk.
Okay, let's bring it all together. What does this mean for you listening right now? We've laid out this unprecedented infrastructure play, that $100 billion, 10 gigawatt commitment. But it's directly balanced against, well, undeniable valuation questions and these complex regulatory fights, especially with China.
So moving forward, what should you watch? Transparency is key. You need to see how these grand plans translate into actual numbers. Keep a close eye on their future 10Q filings and earnings calls.
What specifically should we look for?
Look for how much of that OpenAI investment is actually hitting the books as capital expenditure. And critically, watch those operating margins. Can they maintain profitability while building at this absolutely massive scale? That's the $1 $100 billion question.
And beyond the financials, that other big piece, the Intel collaboration.
Yes, don't forget that. It's less flashy maybe, but just as vital. You need to monitor the actual success of the Intel integration. Are they delivering genuinely seamless combined systems?
Because if they do,
If they pull that off, it really does expand their competitive moat. It can make them almost indispensable in the data center. But if that integration falters, if it's clunky, then the partnership could become a liability, a drag instead of strength.
okay, that brings us to our final thought, something for you to chew on after this deep dive. If that Vera Rubin platform with OpenAI is a massive success in 2026, if they really deliver 10 gigawatts of dedicated AI compute, could that raw power, that sheer infrastructure scale, become the single most important factor defining AI leadership?
Could it? Enough to make all these current valuation debates seem, well, almost secondary.
It's a provocative question. Does controlling the biggest AI sandbox automatically mean you win the game, regardless of the financial metrics we obsess over today? Something to think about.